Hi guys, today I want to talk to you about one of the hottest stocks on the market, which is NIO. NIO is a Chinese electric car company that was once labeled as Tesla of China because of the similarities between the two companies. The stock has been on a pretty crazy run, rising from its low set back in March and April of this year of around $2 to almost $16.50 before settling in lately between $12 and $14. So in this video I'd like to discuss two things. First, what's going on with NIO and what could have triggered this recent run. And second, is this move sustainable and will the shares go higher or will it fall back under $10 once again? And if you like this video, guys, please click the like button, subscribe, and write me some comments. I'd love to know what you think of NIO's prospects. Also, you may check out a link in the description to my Patreon trading club where you can watch my trades and my portfolio pretty much daily. Let's get started. I have to admit that back in February, after NIO posted weak delivery numbers for January amid the pandemic, I thought the company was in trouble. I mean, they were not on a perfect footing before the crisis, having tons of liquidity issues and losing money hand over fist. But with the crisis, I thought this could be a finito for this company. But NIO turned out to be much more resilient than people thought. First, NIO announced that it was going to sell convertible notes in $200 million transactions to several Asia-based investment funds for a total of $200 million. And those notes will bear no interest. Then they secured an investment of $1.4 billion from the city of Hefei, and they also did a secondary offering through US markets, raising over $900 million. These steps gave NIO stability and eliminated a lot of liquidity concerns. Finally, having Chinese government being invested in NIO paid off big time. In the beginning of the year, when Chinese government decided to slash electric vehicle subsidies for cars above a certain price tag, they left a tiny little amendment that the subsidies will be slashed unless a manufacturer adopts battery swapping technology, and conveniently NIO was such a manufacturer. Speaking of battery swapping technology, NIO is a pioneering battery as a service program where owners can rent out a battery and then swap for another one at the special battery swapping station. That means that a potential NIO car owner can just buy a car without a battery and rent the battery separately, which makes the price of the car go down significantly. Just recently, Li Bin, who is the founder and CEO of NIO, told the media that NIO is accelerating the development of a new generation of battery swap station. He said that the company is building swap stations at the rate of one a week, and its future target is to build one station a day. Li Bin also said in the interview that the NIO GAC factory is in the process of ramping up its production capacity, which will increase by 25% to 5,000 units per month by September at the latest. Last year, NIO spent aggressively on expanding its sales and distribution network in China. That spending is one reason why NIO was in cash crunch at the beginning of the year, but the expanded network was a big contributor to NIO's impressive second quarter sales growth. In the beginning of July, NIO said that June monthly delivery numbers were up 191% from a year ago, which is a record monthly total that powered a record quarterly total for the company as well. That result was actually ahead of NIO's own guidance. NIO said in May that investors should expect its deliveries to more than double in the second quarter from the year ago period. Instead, the deliveries nearly tripled from a year ago. So serious management decisions that looked kind of crazy a year ago now look genius. These strong sales results gave NIO its first ever positive gross margin for a quarter of 8.4%. It's pretty significant because before NIO's profit margin was negative, which meant they were losing money on each car they sold, and now it's positive, so they finally stopped losing money and started making money. And for any investors, it's a sweet sound in their ear. NIO finished the quarter with a cash equivalents of $1.6 billion. Which is absolutely stunning to me considering that they were losing almost $450 million per quarter before that and almost ran out of cash at the beginning of the year. Take a look at these figures, guys, and comparisons to last year numbers. The comparison is pretty amazing to me, especially on vehicles delivered and gross margin. These numbers are very impressive and definitely turn heads. It turned my head for sure. What about the guidance for the third quarter? NIO expects deliveries between 11,000 and 11,500 vehicles in the third quarter, up from almost 4,800 in a year ago period. That means that the momentum will most likely continue to build, and we can expect very solid numbers next quarter as well. Besides, NIO also has big plans to go global. Again, Bin Lee just recently said this: yes, we want to be a global brand. We have almost 200 people in Munich, for example, but we are still a very young company and have limited resources. Frankly, I don't think they have the resources to create an infrastructure to go global. Don't forget that going global takes an enormous amount of investment to build swapping stations, NIO houses, creating marketing campaigns, and so on. NIO has barely survived a liquidity crunch in China, so to go global, they have to be on a completely different level, financially and in terms of knowing the consumer and the market. They're much better positioned to compete with foreign manufacturers on their home turf in China, where frankly they have a big advantage. China is a huge EV market, much bigger than and much friendlier than US or Europe. So I think even though NIO has ambitions to go overseas, this is not going to happen in the near future. But what about the stock price? I mean, obviously every investor is interested in that. I've seen a lot of companies that showed great results, but the stock didn't move at all or even went down after an earnings report. Actually, that's what happened to NIO after they reported their recent quarter. The numbers they reported seemed awesome, but the stock tanked on the report. Why? Well, because the stock had a huge run coming into this report, and a lot of the good numbers NIO reported were pretty much baked in the price. Don't forget the fact that NIO has 1.18 billion shares, so it's not a quick-moving stock. I mean, only in April NIO was trading under $3, and now it's trading around 14, which is like 500% increase in just 5 months, which is pretty insane. Nevertheless, I think NIO stock can still go higher. Technically, right now it seems like it's sitting in the accumulation range, and to me, may eventually go higher if they continue to consistently beat the numbers like they did last quarter. Also, the optimism about electric vehicles around the world is at all-time high. New EV companies are popping up everywhere like mushrooms after the rain. China is very serious about becoming the world's leader in number of electric cars on the road in the next 5 years, not to mention how electric cars are changing the rest of the world, and NIO, just like Tesla, is in a great position to capture a large share of the EV market, not only in China, but potentially in other countries as well. And I hope you like this video, guys. For more discussion about NIO and other stocks, please stop by my Patreon trading club. The link is in the description. Until next time.